If you've ever looked into trading futures and you thought that there's no way that I'm putting my own money on the line just to learn, then this video is exactly for you. Because what most people don't know is that there's an entire model out there that's built around trading someone else's capital. And essentially you just prove that you can trade, and then they give you a funded account and you can keep the majority of the profits. And there's no risking your own savings. There's no blowing up your account and then starting from zero. And so in this video, I'm going to be breaking down exactly how prop firms work from the very beginning, step by step, so that by the end of the video, you'll know that this is something that's worth pursuing for you. So let's get into it. How prop firms work. And to know how prop firms work, we first have to start with what the problem is. So most people who get into trading futures really all face the same problem, and that is capital. And that's you. See, you have this big problem right now, all right? You're watching this video, so you have this big problem. And to trade futures seriously, you actually need a decent account size. And we're talking like $10,000 to $25,000 to $50,000 minimum to actually have any real shot in making meaningful returns. And so most people don't have that sitting around. And really, even if they do, who wants to actually put their entire life savings into trading an account and then also risk losing it while also being in the process of still learning? So this is the trap that most retail traders honestly fall into. And I myself included fell into this trap a few times. Okay. So they, you take yourself, right? This is me as well. And they fund a small account and they take too much risk actually trying to grow fast. And, they use their own savings here, right? And they put this into the market and then they get a loss, right? They lose their account. And then they fund it again and essentially do the same thing over and over again, right? They take their savings, they put it into the market, they lose, and this cycle then just keeps repeating. And honestly, the emotional side of it makes it even harder. When you're trading your own money that you especially actually need, every loss honestly just hits differently usually. And you make emotional decisions, you essentially just, revenge trade, and then you blow up and then you start over again, right? And even if you don't, for example, have emotional decisions or revenge trading, and you're actually following your own rules that you've set for trading, sometimes you can break your own rules just because the stakes feel too personal. And this ultimately is really just the core problem. It's not necessarily a lack of skill. And this ultimately is the core problem. A lot of people are actually really not that bad at trading. It's not like they're lacking the skill. It's honestly the lack of capital and the emotional pressure that especially comes with trading your own money. And so prop firms, they exist to solve this problem. And so again, the old way was you had to risk your own capital. You needed, $25,000 to $50,000 to start, and then you would blow up, you'd lose your own money. You have emotional pressure because that money kind of means something to you. And then you keep 100% of only the small gains that your small account actually has. Now, the new way is that you're risking only the evaluation fee. And for example, you can start from like $200, $100 something dollars in some cases, sometimes even much less. And then if you blow up, you only lose that amount. And so with that, you can trade without fear. And you also keep 90% of a big account that you can get up to. So what exactly is a prop firm? So a proprietary trading firm, also known as a prop firm for short, is a company that provides traders, with access to funded accounts. And in exchange, when you make profits, you split them with the firm and you keep the majority. So typically it's around 80 to 90% of the profits as well. And then the firm keeps about 10 to 20%. Of course, you would have to check with the rules of the specific broker that you're using. And ultimately, what I love about the model that I think is just so beautiful is that you're trading their capital, not your own. So essentially, if you are a good trader and you want to put it on the line and have, for example, access to a big account, you can easily prove this by setting up a funded account and trading with a firm's own capital. And actually, there's a lot of people who do this for a living. So you're probably wondering now, how does the firm actually make money if they're giving you their capital too? And that's a good question to ask. And so they charge you what's called an evaluation fee, or EVA. eval fee. And we'll get to that in a second. So they have that, the eval fee, but then they also take a percentage of your profits as well on the funded account. So think of it like an audition basically is that if you pay a small fee to audition, if you pass, you then get the job, and the job comes with the salary based on your performance. So here's how the process works actually step by step. So first things first, you pay a eval fee, and this is typically anywhere between $50 to even $600 depending on the account size that you're actually going for. So for example, a $50,000 funded account evaluation might cost you around $200. A $100,000 evaluation might cost around $300, and this is only money that you're putting in. So that's step one. And then we go to step two. Once you pay for that fee, the evaluation process happens in a simulated environment. So it basically mirrors the real market conditions exactly. Same prices, same execution, same everything. You're essentially just paper trading, essentially. The only difference is that it's not live capital yet. And you're proving that you can trade profitably before the firm actually, puts real money behind you. So that's step two. Now we go on to step three, which is you hitting, your profit target. And each firm actually sets profit targets that you need to hit during the evaluation. And typically 6 to 10% of the account size is what it is. So for example, on a $100,000 account, you need to make around $6,000 to $10,000 in simulated profits. And that's step three. Now moving on to step four, and this is actually where most people fail. And it's not because they can't trade, but it's because they break the rules. So things like daily loss limits, maximum drawdown limits, position sizing rules, we'll cover these in detail in, for example, a separate video, because that's a whole separate topic to honestly talk about. But the short version is that the firm is testing whether you can actually manage risk, and it's not whether you can pick winning trades. And then we move on to 5, which is you get your funded account once you pass. So you pass both the profit target and the rules, and you get access to a real funded account, and now you're trading the firm's capital. So then we go on to 6. You can withdraw the profits. So you hit profit milestones on the funded account, and you can request a payout. So the firm pays your percentage, usually around 80 to 90% of what you made. They keep the rest. Now, let me show you kind of the money flow, because this is kind of where it clicks for, most people. So you pay, let's say $207 for a $50,000 account, evaluation, and that's it. That's ultimately your maximum risk, and that's the most you can lose also in this entire process. So you trade the evaluation, and let's say you pass it. Then you get the funded account, and the firm is backing you with $50,000 worth of capital. And then let's say you make $3,000 in month 1, and with the specific account that you bought, you get to keep 90%. So therefore, off of the $3,000 you made in month 1, you can pocket $2,700, and Apex would then therefore keep $300. And let's say that you lost the evaluation. The only risk you have is losing the $207. That's your only risk. You don't, it's not like you're risking $50,000 of your own capital, so you don't have that to even worry about. Now let's talk about the rules, because this is honestly where most traders trip up usually. So every prop firm has rules that are designed to test your risk management, and the 3 main ones that you'll see everywhere are, for example, daily loss limit. So for example, with this is really the maximum that you're allowed to lose on any single trading day. So go over this and you fail the evaluation. It's there usually to just stop you from having one catastrophic day that wipes out weeks of progress. And most firms set this at around 3 to 5% of the account as well. Now we go on to the second one, which is max drawdown. So this is the maximum drawdown that you can actually lose from your account's highest point. So if your account peaks at, let's say, $105,000, and the max drawdown is $3,000, then your account can never fall below $102,000 or you fail. This rule forces you to protect your gains and not just chase more profits. Now, step 3 is the profit target. So this is what you need to hit to pass. And it's simple enough, but the key is hitting it without breaking the other 2 rules. And that's the real test. A lot of traders can make money. Not as many can make money consistently while also following strict risk management rules. And that's exactly what the prop firm is testing for, because those are the traders they actually want that are managing their capital. And like I said, if you break any of these rules, you fail the evaluation. So let me show you an example of what this looks like in practice. So this is Apex Trader Funding. It's honestly one of the most well-known futures prop firms in the US. And you can see here that they offer evaluation accounts ranging from like $25,000 all the way up to even $300,000. And you can also kind of pick different account sizes, all of that, intraday trail, end of day trail, trade, select which vendor as well. And there's also, of course, it's not just like there's Apex Trader Funding, there's Funded Futures, there is Top Step X, there are so many different platforms out there. I think Apex is a good choice, especially for a lot of beginners. And along with this, you can trade lots of different instruments. So equity futures, currency futures, agriculture futures, metal futures, micro futures, etc. There's a lot. If you want to trade a hog, all right, you can trade a hog on this platform. All right, you can trade lean hogs if you want to. And also they run promotions all the time. So sometimes, you know, the price for the accounts that you see on here is actually not the cost that it could be. And if I can get a discounted link, I will link one down in the description below. But I highly recommend going through the FAQ, you know, just reading through, for example, everything about it, how it works, you know, all of that. And you could also see it all on the homepage. They give a lot of info about like all the different steps as well to get a live account. And also the point of this is just for me to say that this is like a real established business, right? They've paid hundreds of millions of dollars to funded traders. And this isn't some like obscure thing, right? Or a scam or something like that. It's a legitimate pathway that thousands of US traders are actively using right now to even make a living or just extra income on the side. And this is kind of the process. So for example, you pass the evaluation, then from there, then you do a verification ID check, right? They just want a little bit of KYC to see who they're paying out, right? And then you get your funded account and then you trade and you hit your first profit milestone. And then you can request the payout from there. And then you can keep 80 to 90%. And then you repeat and you can scale up. You can get more accounts, etc. Now, real quick, who is this for? So this is for you if you understand basic markets, you don't want to risk your savings, and you're also disciplined with rules, and you're serious about trading, and you want structured growth, right? Honestly, this is best, especially if you want to have like simple, boring gains, then that's what I recommend, right? Simple, boring gains. And honestly, that's like, you know, the more you trade, the more you realize too, simple, boring gains are the best gains in the market, right? Now, this is not for you if you've never looked at a chart. It's not for you if you want guaranteed income. And it's also not for you if you want to get rich overnight. Like I said, this is about boring, slow, consistent gains. And it's also not for you if you're completely new to trading either. I wouldn't fully recommend it. You want signals also or someone else to trade, then this is also not for you if that's you. So the model behind prop firms are honestly absolutely beautiful to me. And let me know what you guys think about, for example, Apex and other prop firms as well down in the comments below. And also make sure to subscribe for more content just like this. So I'm going to be uploading a lot of futures content, me personally trading, trading reviews, that type of thing, going over trades, the markets, that type of thing. And also going over various different prop firms in the space as well, reviewing them. And I'll be also making more videos about Apex into specifically like the rules and other things on the platform as well in the future as we go along here. So anyways, guys, that's all I have for this one. I'll see you in the next one.